Good morning, everybody. Hey, welcome to Thursday. It is Jobs Day. We'll talk about that and more when Dave joins us here in just a second. Don't forget that the world we live in, there are so many things that we really can't control. However, you can control the amount of risk you have in your portfolio if you know what that risk is and if you know where it should be. Give us a call, 863-382-0037. Let us help you with our core retirement design the retirement you always dreamed of. That we got Dave coming up next.
Don't you bring me down today.
Lights FM, Christina Aguilera there. How do they call me Morning Dave? It's 8:42 now, 18 before 9. We're going to check in on your money and see what goes on this morning. And well, we started about midnight last night with some Elon Musk remarks that didn't help a bit, and then the macro data doesn't help much, and neither do the reports that are out. Can you tell that Phillip, Statler, and I are not feeling overly good about life this morning? At least not life with a dollar sign in front of it. Let's check in with Statler Financial Services' very own Phillip Statler and see if he's smiling yet. Phillip, how are you?
Hey, good morning, Dave. Hey, I'm doing well. The market's well, not so well. We'll talk about that here in just a few seconds. But and we pushed kind of a mixed bag yesterday, but the ones that were down were down more than we would like them to be.
Yeah, it was kind of a whole steady day on balance. I mean, the Dow was off by 80 points. Standard & Poor's, though, was basically flat, down 35 cents. And NASDAQ actually eked out a fractional gain. And then about midnight last night, Elon Musk says something that, well, we're not going to have a great report, so we're going to probably sacrifice margins in order to preserve sales. And the market didn't seem to like that. Tesla's stock futures went down by like 8% right after that and drove the Dow down by better part of 200 points all inside of about 10 minutes. We just can't keep investors happy. We're going to keep people working. They sell off. We're going to fire a few thousand more people in the case of Meta, and they sell it off. Nobody likes anybody these days, do they?
Well, it's tough times, right? Interest rates have been up long enough now that we're starting to feel the effect. Businesses are feeling the effect. The consumer's feeling the effect. And it's finally starting to show up in some earnings reports and some sales reports.
Absolutely. Start out with the macro stuff because we've got a whole pile of earnings reports to talk about today. Yeah, Tesla said that they were going to cut their margins in order to preserve employment and preserve manufacturing volume, which did not do well for the market. Then we come out with Meta saying they're going to add to their layoff number, fire a few more thousand people, and then at 8:30, out comes the initial jobless claims report. A small miss, 245,000 people making first-time jobless claims last week, which pretty much gets us to about the normal first-time claim figure for a normally functioning economy. But the continuing claim number, which is still inordinately low, but it's still the worst we've had since way back in 21, 1.87 million continuing claims. The fact that it's the biggest number in the better part of 2 years, I think that probably made some people sit up and take notice, Phillip.
I would think so, Dave, because we've been talking about how employment needs to somehow start to decline in order for the Fed to be happy, because wage inflation has been one of the big drivers in this whole situation. And the only way to get wage inflation under control is for businesses to start laying folks off and other businesses not needing to hire them. But I don't know that we're going to get there.
Well, looking at this at the very least in the direction that it's going, Jay Paulson ought to be popping a cork on a champagne bottle this morning then.
Yeah, I won't give him that much credit right now.
You and me both. The other number that came out from the government data dump this morning was the Philly Fed Manufacturing Index. I always preface these numbers by saying the methodology doesn't matter, it's the direction that matters. It was 23.2 to the negative side last month. They expected it to improve a little bit to minus 19.5. Instead, it went 10 points in the other direction. It showed a negative 31.3 for manufacturing index in the Philly Fed's district, which can't be what economists are looking for as good news, can it?
Not the economists, but the Fed may be. I mean, because that just shows that we're seeing a slowing of the economy. If the manufacturers are starting to decline, then that's the slowing of the economy. And you and I both know that's what Paulson wants to see.
Yeah, I see one of the four horsemen of a recession happening there based upon this day's reports anyway. I always say one day doesn't qualify as a trend, but I got basically no good news out of anybody to speak of today, and I'm not too sure you've got much good news as far as the quarterly reports you got in this morning either. Tesla putting out the thing that, yeah, we're going to shave margins in order to make it work. That didn't help, but at the same time, their report was kind of a miss as well, wasn't it?
Yeah, it really was. You know, their net income earnings, they fell more than 20% from last year.
Wow.
And yeah, so a big drop there. And so, you know, the macro environment is starting to affect people's buying decisions right now. And so that's affecting Tesla substantially, down almost 8.1% this morning.
Yeah, and they're holding that. After Musk threw out that we're going to shave margins, things went down about 8%, and the report didn't help them one tiny little bit, did it?
No, it really didn't. You know, on the
Absolutely.
other side, you know, we talked about banks quite a bit this
Yeah.
week, and we've got another handful that have come out, and they're not helping us any, Dave. American Express kind of set things off, and they missed across the board in terms of revenue. Well, revenue did come in better than expected. However, their first quarter was a pretty substantial miss on earnings. They're down 1.3%. Let's look at Zion Bank Corp, which is another pretty good sized regional bank. We don't have them down here, but in the Midwest, they're a pretty big company, and they missed as well by about 20 cents a share. Revenue was down by about 10 million, 12 million that they missed on revenue. And so they're trading down this morning almost 5%.
Ooh.
And yeah, and then you add Key Corp, another big regional financial firm. They missed earnings. They're supposed to come in at like 30 cents I mean, they're supposed to come out at like 44. They came in at 30. They missed revenue as well. So they saw a big hit. They're down this morning 5.1%. So all the banks are just not doing well this morning. I was trying to find some things that are doing well.
And nobody's banks are doing well. Yeah, that just kind of that kind of changes the picture of the financials to an on balance quite negative quarter, which kind of backs up a news item I heard about Warren Buffett having announced that he's unloaded stock in a bunch of his financial investments because he quote unquote says that it's just enough accounting and tricks to be able to make them look better than they're really at. So he's reducing his position in a bunch of his smaller bank shares, which, coming from the Oracle of Omaha, can't be a good harbinger for the banking industry either.
No, I would not think so. Hey, but on the other hand, we had Big Old Blue. They reported, IBM. They beat by 10 cents a share on their earnings. Now, their revenue came in a little bit lower than expected off the bat, but they are trading actually up 1.2% this morning. The other one, people are still gambling though, Dave. They're still throwing the dice. Las Vegas Sands reported they beat by about 18 cents a share. Revenue topped expectations as well. They're up 4.9% this morning. And then AT&T, yeah, I mean, AT&T.
I was just looking at the juxtaposition there. Our banks are going downhill, and casinos are going uphill. What does that say about our economy?
AT&T, a good old standby company. They did miss on revenue. They slightly beat on earnings. Not enough to keep people happy. They're down 5.3% this morning. And drum roll, please, for the big winner of the day, D.R. Horton, the home builder. Man, did they blow it out of the water? Their revenue beat by $2.5 billion more than expected. And their earnings per share came in at almost $1, not quite $1 over what was expected from them. So they are well, probably the biggest winner I can find today, up 4.75% this morning.
Well, there's some good stuff. Now, if we can only have a good existing home sales report later on today, we can actually smile tomorrow morning at least one sector. Resetting the table for the morning, it was a mixed bag yesterday on Wall Street. The blue chips were off by a bit, but the more adventurous NASDAQ stocks were up by a bit. 45 minutes before we open, I'm not seeing much green ink anywhere in my futures. How about you?
No, I got a lot of red oceans out there today. Dow's down 0.5%. The S&P 500 is down 0.7. The NASDAQ 100 is down 0.9, and the Russell 2000 is down better than 0.75%. So everything's down. Silver's down about 0.1%. Gold didn't have a pop though. They're the only thing that popped. Up about 0.5%. They did cross back over yesterday, that 2000 mark to 2017 right now. But crude oil's taking a big hit as well, down 1.8% to $77.80 a barrel. Not sure what's really driving that, unless folks are looking at the economy and saying it's going to be tough.
And that's kind of my reaction. I'm wondering if it's expectations of a slowing economy, because our indicators this morning aren't real good. Overseas markets, the Asian rim was kind of a tale of two worlds. The Japanese and Hong Kong markets were up quite a bit. Everything else was off fractionally at the close early this morning. Europe is looking at our futures activity and saying, we've got some sell-offs going on. Italy's down by over 1%. Rest of the indexes in Europe are off fractionally halfway through their day. This shouldn't concern you if you've got a plan for retirement, but it hasn't been a particularly good day so far. If you don't have a plan, you need one. How do I find you to get a hold of one, Phillip?
Exactly, Dave. And that's why we developed our core retirement design to help people balance that risk in their portfolio and make sure that they're on the right path for the retirement they always dreamed of. Give us a call, 863-382-0037. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And back here again tomorrow morning with hopefully better news, and we're starting Thursday out with. Fair enough?
Fair enough, buddy. Have a great day.
You too, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Remember.
Hey, folks, again, I want to thank you for joining us today. I hope you'll join us again tomorrow, same time, same place. Until then, have a great day. Bye now.